Good morning and welcome everyone to the Money Control live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities are set for somewhat muted start coming in on Monday. Whether they're going to be able to snap the 4 consecutive session losing streak in an F&O expiry week remains to be seen. GIFT Nifty has indicated a positive start coming in for the Lal Street. However, global cues at this point of time have been indicating a little bit of negative side towards the whole start. US stock markets ended lower. S&P 500 dropped third straight week as Fed worries lingered. Asian markets fell after brutal central week. Also talk about FIIs. The trend hasn't been too encouraging. Sold shares worth around 1,326 crore and DIIs have bought equities to an extent of 800 odd crores. Let's also talk about NSE likely to introduce extended hours for F&O hours, in terms of the F&O trading. And right now is awaiting SEBI's nod on that one. So that's a big development as and when, if at all, it happens. Do remember the fact that in the previous past too, such measures have been spoken about but not been implemented. Whether SEBI has already laid down the rules that would enable the exchanges to keep the F&O trading open until 11:55 p.m. and shares, that remains to be seen. It is something that ET report has carried this morning and has said that NSE, which has been reportedly mulling over the extension of trading hours since early this year, will be making phased introduction of products in the extended trading hours. It intends to begin with the index futures and options, which is including Nifty and Bank Nifty, and later include the stock derivatives too as a part of it. So it's going to be, if at all, if this would take place, it's going to take place in perhaps a bit of phased out manner. So that remains to be seen. But let's actually discuss the day's strategy, the trade, and perhaps the slew of stocks that we have to discuss with Prashant Sawant, who is the founder at Catalyst Wealth, joining us early this morning. Good morning, Prashant. What do you first make out of this development that the ET report has been carrying? NSE likely to introduce an extended hours for F&O trading. What do you make out of it, and what is your strategy for the day?
Good morning, Nickey, and very good morning to all the viewers. Not at all happy with the announcement, very honestly, because I would not like the extended hours. And ideally, it would make much of a difference as well, because anyways, the main purpose I see is to avoid the gap up and gap downs. That cannot be avoided, because even at night, the emotions are at work globally. And when the exchange opens in the morning, you're bound to see those gap ups or gap downs. So I think it's not going to make much of a sense, but what matters to be seen more is, does the volume really pep up or it stays normal? Based on that, the decision would make sense.
Yeah, that's quite a difference in terms of the trading hours, right? That is what has been proposed is from 6 p.m. to 9 p.m. where the markets participant can trade in futures and option contracts, and the regular trading pattern is between 9:15 to 3:30. So that's a bit of extension, I would say. But what's your strategy for the day? 3 consecutive session of losses coming in for markets, perhaps after 4 consecutive session of losses in the consecutive week, in the previous week. Do you think this week would be any different because it's an F&O expiry week? What's your strategy for the viewers?
So I think, Nickey, we closed on Friday in Nifty futures around 19,710 approximately. A make or break level happens to be 19,650, which is just 50 points below the Friday's close. I think if we close below that, then we may nosedive to somewhere around 19,400. Overall, the texture is a bit on the negative side. So the support 19,640 needs to hold. If we break that, then as I said, we may see 19,400. At the same time, in Bank Nifty, 44,500 on the futures is a make or break level, which is hardly 200 points below Friday's close. And if we break that, we may see the 44,000 levels on Bank Nifty as well. Overall, if you see 2 stocks which are not performed well, HDFC Bank and Reliance, catering respectively to Bank Nifty and Nifty. So unless and until they step up, I don't see any respite for both the indices.
HDFC Bank is clearly an interesting one of the lot, where we've seen some amount of losses probably creeping into the counter after the analyst meet that took place. Perhaps the synergies of the merger need to be seen. But look at the start. We are looking at somewhat Flat start, but with positive bias out there. 19,650 mark, way above that level for Nifty 50 at this point of time. Let's also talk about Bank Nifty. How is that stacking up essentially for you? Just to see if there is some amount of it's a flat trend which is playing out even for Bank Nifty index overall. 44,600 mark, holding just above that level, perhaps slipped. It is a flat start coming in, and remains to be seen what direction do the markets actually take during the course of the day, especially given that it's an F&O expiry week. Let's talk about mid-cap index and the small-cap index just to see if we are looking at certain amount of traction building in on the broader front, the momentum intact. Well, at least let's just say it's a positive start with decent start with a positive bias. 0.1% of gains coming in for the mid-cap index, and small-cap index is acting a little bit differently, perhaps a bit of outperformance there, just like how the trend has been playing thus far. Let's also talk about the other sectoral indices that we have, and also look at RIL and HDFC Bank. Perhaps what Prashant suggested, that till the time we don't get enough amount of weightage coming in or support coming in from the index heavyweights, we perhaps will have to look out for some amount of capped gains coming in. Reliance at this point of time isn't really participating in, and hence you can see some amount of caution also which continues to play out in the market. And HDFC Bank, well, a bit of momentum picking up there. That is the one that you need to watch out for. There has been a substantial market cap erosion which has taken place for this blue chip company. Remains to be seen if retail investors are still interested in a company which has structurally foundation, which is still, the story remains intact. A bit of earning growth momentum perhaps would not be as per what the past performance has been, but nevertheless the structural story continues there for HDFC Bank. Let's also talk about other sectoral indices that we have. Look at PSU Bank. Well, that's the one where we're witnessing some amount of losses, 0.3% of loss coming in for PSU Bank. The entire sector has shown a splendid run, but finally some amount of profit booking has crept in to PSU Bank's. Pharma is doing well, 0.1% of gains clocked in for Pharma index. And if you talk about the other sectoral indices, something like the likes of defensive like FMCG, that is also right now it's slipped in red and perhaps trading down and out with losses to an extent of 0.2%. Metal, flat start to the day. And let's also talk about the realty index along with auto basket, a flat start, nothing sort of a day for these indices really. I mean, if you look at the momentum right now, it is a flat start to the F&O expiry week. We remains to be seen how does the entire trend shape up for the entire week as well as the day. Let's also talk about the top gainers and the top losers that we have on the list right now for you. Well, Bajaj twins make it to the list, top list rather. Cipla is also trading in green, and also let's talk about ONGC, which is holding up well, along with JSW Steel. The Infra IPO actually opens up for subscription. That is also one that you need to watch out for. Apart from that, Asian Paints and NTPC. These are some of the other gainers that we have in the list right now. Let's talk about the top losers. Well, you have Axis Bank, L&T, Hero Motor Corp. Along with that, you have M&M, Infosys, and Tata Consumer Products. These are some of the completely divergent trend, I would say. No specific theme that is playing out per se in the Nifty 50 losers theory. But if you look at the divergent performance that we're looking from the banking space, the financial space, you have Bajaj Finserv and Bajaj Finance as the top gainers. And at the other hand, you have Axis Bank as one of the top losers. So look at the discrepancy that we're seeing within the financials and how banks have been behaving. Prashant, come in on this one. What do you make out of the divergent trend? And what do you suggest, what's your view on perhaps Bajaj twins along with Axis Bank, if you're not really talking about HDFC Bank at this point of time, which seems to have participated somewhat to the underlying positive momentum of the markets?
So I think, Nicky, if we look at Axis Bank currently trading around 1,005 in spot, I think it may go to somewhere around 990. 990 happens to be a major support for this, almost just below the 20-day moving average. I think if it breaks the 990 level, then we may see further weakness. Currently, my suggestion would be to wait for 990 levels. If you see a bounce, it would be a good level to add. Your stop loss has to be somewhere in the region of 975. So for me, 990 is a make or break level for Axis Bank.
And for Bajaj twins, what's the strategy out there?
So I think if I look at Bajaj Finance, the price action last week was good in a weak market. Even today, the opening is very strong. I think one can add positions here at 7,670, maintain a stop loss at 7,600. I feel we can easily see levels around 7,800 for this expiry. So this stock looks good in an overall dull and weak market. I think we can definitely look at buying options in Bajaj Finance.
Sure, stay on with us. We are quickly going to address in stocks and news before we move on to the fundamental story, and we need your view, Prashant, on those ones. Delta Corp, essentially, do keep an eye out on this one. It's received an intimation for payment of alleged GST liability of 16,822 crore. The tax liability notice is for the period of July 2017 to March 2022. Look at the losses for Delta Corp. It's clearly the stock of the day, down and out, with losses of around 10% on this casino gaming company. The tax liability is based on the gross bet value of all the games played at casinos. The company will pursue all legal remedies to challenge the 16,000 odd crore demand which has come in. Do bear in mind the fact that if we just talk about the profits, what is generated from FY16 to 23, it's nearly to an extent of 1,000 odd crore. And the tax paid to be payable during this period is around 16,000 odd crore. Also, do bear in mind the fact that it is 3.5 times higher as compared to the current market price for Delta Corp. It has recorded a poor sales growth history, nearly 11% growth over the last 5 years. That's not a very steady state of numbers. Talk about the promoter holding, it's nearly 33% for Delta Corp. The only positive side for this company at this point of time, looking at the financial, is that it is a debt-free company. Down and out now with losses of around 10 odd percent. Prashant, come in on this one before we address in the other stocks and news. Delta Corp is the one that clearly is in focus right now. What is your strategy? Would you suggest Delta Corp, or you think probably traders are better off with something like Nazar Technologies, which has actually done well, in the past 1 month or so?
So I think definitely if I compare both, I think Nazara Tech happens to be in a better shape. So if you want to add positions, you can definitely add positions in Nazara Tech. Current price is around 855, 860. I think one can maintain a closing basis stop loss of 825 and hold on to them. I think eventually this may show levels around 930, 935, which was the previous swing level. So overall, from a returns perspective, strength perspective, I would definitely look at Nazara Tech, and I would totally avoid Delta Corp.
All right, so that's the word coming in. Nazara Tech over Delta Corp. Complete avoid coming in for Delta Corp. But Bajaj Finance, do remember the fact that Bajaj twins are actually holding up the fort in green for you. Bajaj Finance is going to be considering in fundraising plans essentially through preferential issue, the QIP method essentially. The board is going to be meeting about discussing the fundraise plans on October 5th. Ahead of that, you see both of these companies actually being the top gainers, Bajaj Finserv as well as Finance for that matter, doing extremely well in trade. What I'd also want to talk about is SAMHI Hotels. Now, this is a new kid on the block which is listed, right? Morgan Stanley has offloaded 2.97% equity in this counter on the listing day itself. The shares were sold at an average price of around 139. Now, do bear in mind that it was quoting at a level of now 144. So it is a significant discount even to the current market price. JP Morgan has sold Morgan has sold in 2.97% equity against 3.45% that they have been holding before the listing day. And the buyers, on the other hand, were something in the like of BofA Securities. They've bought in an additional 2.1% stake, and this has also been purchased at a price of around 139 to an amount of 63 odd crore. You have other companies like SI Investment Broking too, which have picked up stake in the company overall. But to bear in mind the fact that this hotel listed had a very muted start, 7% premium, and if you talk about just the multiple profile, it's way lower as compared to what the peers have been demanding. It's perhaps a turnaround story waiting to unfold. Remains to be seen if retail investors actually remain to be excited to lap it up. The company is a highly leveraged company, which is loss-making entity for the last 3 years, and also follows an asset heavy model, and expects to use, of course, is going to be using in the proceeds now to repay the debt and reduce the finance cost. Cholamandalam Financial Holdings, another one that you need to keep in your mind. Promoter entity, that has exited in by selling in their personal shareholding. That is the one that we need to watch out for. Apart from that, this is done at an through a market open market transaction, and has been sold at an average price of around 1,150 per share. So that's the one that you need to watch out for. Apart from that, also keep an eye out on Suzlon Energy. REC has withdrawn its nominee Ajay Vora from the board of Suzlon Energy. The stock right now is doing well with gains of around 1.5% out there. and the withdrawal has come on account of the financial assistance essentially that was granted by REC-led consortium has been paid in full, and hence you see that nominee being now removed from the board. It is a development which is positive in nature for Suzlon Energy, and the stock is just acting as per the development. Let's talk about Religare Enterprises, where the Burmans have finally announced in an open offer of around 253 per share for a 26% stake in Religare Enterprises. That's the one that is you can probably talk about in the morning, and could be a theme that could play out for the entire day. The Burman family owns a majority stake also in Dabur. As of June 2023, it had 14% stake in Religare Enterprises through its 3 entities. So that's a bit of development there. If you can look at how Religare Enterprises is typically stacking up, that also remains to be watched out for. But Prashant, come in on this one. Of the entire stocks and news that we have, something in the likes of perhaps Religare Enterprises, how are you looking at it? The offer price for equity shares is now to an extent of 235. How do you look at the entire counter?
So I think, Nicky, overall, this has been one of the strong moving counters for the past 2 months. And even now, at a price of 265, I think one can look at adding a position and holding for the next couple of months. A stop loss would be, monetary stop loss at 240, 245 would be good. So you can plan the quantity accordingly. Overall, I feel this stock may show levels around 300 to 320 in a quick 1.5 months time.
All right, the stock right now is down and out with losses to an extent of 3.5%. But Prashant, we're just going to thank you for taking out the time and speaking to us this morning. It was indeed a pleasure chatting with you, as always. All right, let's actually address in the fundamental side of the story. There is enough to be spoken about. Do bear in mind the fact that macros, which were thus until now not spoken about, have actually started taking the center stage. And in this week, which is going to be an eventful week, remains to be seen how macro, FII trend and FNO expiry overall dictate the cues for Indian equity markets. But to discuss this and more, we're being joined by Ajay Vora, who heads equities at Nuvama Asset Management. Morning there.
Morning.
All right, I'm just going to start off with your assessment overall. Do you think a bit of froth is still there for the equity markets even after it recording the biggest weekly loss in 7 months in the previous week, falling by over 3% for both Nifty and Sensex? Do you still see some amount of froth in the mid cap and the small cap index? Your basic assessment on what do you think, how are the valuations stacking up and the direction in the way the market is headed right now?
So, hi, good morning, and thanks for having me on the show.
Pleasure.
So broadly, if you look at it, I wouldn't say that there is a froth in the market, but clearly our markets are no longer cheap. So if you look at how the markets have behaved over the last 6 months, the frontline index, which is Nifty, has moved almost 20% from the March lows, and most of the the small and mid cap indices are also up around 30% plus. So definitely there has been a valuation reset in the market, and rightfully so, because most of the companies have reported fantastic numbers. So as we have seen historically that generally when the overall global environment is sanguine, you will end up having returns very much front loaded, and that is what has happened this year. But now from here on, I think that it is necessary for the markets to consolidate at the current levels within a range. I would say somewhere around 18.5 to 20,000 in that kind of a 10% range. But broadly, I feel that the market setup and the overall corporate earnings setup is also looking very positive. And to top it up, the whole the news on the India being included on the bond index side, that is also a very big positive for the next year when the inflows will start coming in. So in the near term, I think that the global risk have emerged. If you look at the crude prices and if you look at the US rates, they will definitely be a major headwind for most of the global markets, including India. And therefore, in near term, we may see some sort of consolidation, but the setup is really good for a 12 to 18 month period.
Sure. I also wanted to chat with you extensively about the banking space and the divergence that we're seeing between both PSU banks and private banks. I'm sure you would have preempted this question given how the momentum has already stacked up. For PSU banks, perhaps, which are sitting at that 13-year high, a bit of profit booking here and there, but the trend remains intact. Let's also talk about just a little short-sighted today. If you just look at the divergent trend between something like a Bajaj Finance, of course, there is a news trigger to it on fundraising, and something like an Axis Bank or HDFC Bank for that matter. The question is, what do you like more, PSU Bank versus private banks? And B, within the space that you like, which are your top picks?
So if you clearly, look at the PSU banks in specific, we are seeing this whole banking sector now. If you look at the whole asset quality issues, they are absolutely behind the whole sector now. So be it gross NPA or net NPA, they are trending at almost I would say 7-8 year low. And most importantly, these banks are not in need of capital as of now. And most importantly, they have also started seeing reasonable recoveries. So just to, put things into perspective, most of the private sector banks delivering 14, 15, 16% ROE, they would be trading at somewhere close to 2.5 times the larger private sector banks. But if you look at the PSU banks, the tier 2, tier 1 PSU banks, they would be also delivering closer to 13, 14% ROE, and they are trading at less than 1 time price to book. So broadly, markets have moved to a phase where nothing should be trading extremely cheap. And therefore, there is a valuation reset which is happening on the PSU banking side, which can go on for some time. But definitely, over a longer period of time, we all need to see that, these banks are run by management, which may not be that great compared to the private sector banks. And therefore, you need to have a proper balance between the whole banking allocation. So that's where I see the whole PSU bank as of now. Coming back to, the whole Bajaj Finance, if you look at the news, I think it is a very positive news. They are raising money at a time when they are seeing a significantly higher growth going forward, and that clearly tells us that the valuations can sustain at current levels, and if growth accelerates beyond 25-30%, that is an additional upside. So if you look at the estimates which are moving around in terms of the money which they can raise, anywhere between 8 to 10,000 crore, that will not result in a significant dilution to both earnings and ROE. But that clearly gives a great signal for the forthcoming growth for the company. So I think it is a positive news, and considering the stock has always traded at expensive valuation, it can continue to do so.
Sure. Also, Ajay, let's talk about a bit of freak trades which are taking place in BSE derivative segments. There were two of them which took place. Both happened in deep out-of-money options contract. And also there is one more development coined with regards to now NSE thinking of introducing extended hours for F&O trading, and perhaps is awaiting SEBI's nod. So you have one exchange here which is kind of still trying to figure it out and introduce more category, and perhaps seeing a bit of error and trial and errors in terms of F&O. And there you have NSE now, which is planning to extend the hours of the existing derivative segment, which is high in volumes and perhaps the only monopoly. How are you looking at this development overall for the F&O market and the retail investors typically?
So Nickey, I'm not aware of these trades which are happening right now. But if you just look at, and honestly, I don't have a very strong view on this. But if I just look at both the exchanges, I think that BSE is taking all its efforts to launch new products and getting their systems and operations in place. That is taking time, but I think they are progressing pretty well. Whereas NSE, as you rightly said, is an established player with a significantly higher market share, and they have tested all this new products and technology related issues well in advance. So I think that both here are having their own role right now. Beyond that, honestly, I don't have a very strong view on this.
Sure. Let's also talk about Delta Corp in that case. If you are looking at the online gaming companies, if at all, for the previous quarter one was a steady one for both Nazar Technologies as well as Delta Corp, if you look at the financials. But in today's day, after, there was a GST announcement, perhaps which came in for Delta Corp, where 3.5 times the market capitalization is perhaps being charged or demanded by the government as a GST, with the profits just being around 1,000 odd crore within that period. What do you think about these online gaming companies and typically Delta Corp also?
No, so it clearly is a significant blow to the company, but I'm sure that it will be contested, and most importantly that the business is in a I would say in a way a monopoly market, and there are quite a few issues considering the regulation and all which are going on since quite a few months. I think the government and the whole industry need to resolve this because it is definitely one of the most important and I would say growing industries. So they will have to, resolve these issues, and wherever the discrepancies are there, they need to be resolved.
What would you prefer between Nazar and Delta Corp? Do you have a view there?
No, sorry, I don't have a view there.
All right, so I'm just going to take a step back and perhaps ask you questions which are more aerial questions and perhaps long-term in nature, given the kind of cues that are stacking up in terms of macros, in terms of oil, perhaps in terms of the way even rupee has been behaving, in terms of FII flows, which perhaps, FIIs have turned in net sellers after 6 months, after the rate hikes or the potential fears of rate hike that have come. How are you looking at it prospectively? I mean, do you think we are now headed in a little negative trajectory with all of that in offing, given the macros have started worrying the markets a little bit? What's your perspective?
So as I said earlier that, we have seen a front loading of both returns and FII flows over last 6 months. So if you look at the last 6 months, FII inflows have been closer to $16-17 billion. And this has happened after a significant outflow over the previous 2 years. So I think that, some sort of cool off considering the global risks which are rising, as we discussed at US rates and the oil prices, there would definitely be some sort of cool off. But if you look at, the whole FI holding in India and compare it with historical numbers, they are still pretty much underinvested. So on an average, they were holding closer to 20 to 23% of the market cap, which is now somewhere close to 18.5, 19%. So to that extent, I feel that considering a $16-17 billion inflow, some sort of consolidation or cool off is necessary. And then, once you have the onset of the festive season and earnings number also starts picking up in the second half, you can again see some sort of, inflows from the FIs.
All right. Have you had the chance to look at JSW Infra IPO, which opens for subscription today? It is perhaps the first one in 13 years from JSW stable. Have you looked at it?
No, we haven't looked at it.
All right, Ajay, we're just going to leave it at that. And thank you for taking out the time and joining us this morning.
Thanks.
All right. In a first IPO by the JSW Group in 13 years, JSW Infra has launched in 2,800 crore IPO on September 25th, which is today. It's going to be entirely a book build, no OFS, all fresh issue. And ahead of the IPO, the company has already secured in 1,260 odd crore from the anchor investors, and some of the prominent names like Madhu Kela, Sunil Singhania have already roped in to this particular anchor book. The company has fixed a price band in the range of 102 to 108 per share, and the investors can bid in a minimum of 130 shares in one lot. That's essentially the word coming in terms of the basic details. Now, also bear in mind the fact that the IPO opens for subscription on 25th, closes on September 27th, and the shares are only expected to be listed on October 6th. That's the basic nut case of the entire nutshell details of JSW Infra. It's got to be essentially utilizing the proceeds for repayment of outstanding borrowings. It's got to be financing in capex requirements through investment in the wholly owned subsidiary. It's also going to be financing in and capex requirement for other subsidiaries, that is JSW Mangalore, JSW Jaigarh Port. These are essentially the two subsidiaries where it's got to be taking care of the financial capex requirement apart from paying out the debt that it has. Now, JSW Infra is a part of JSW Group, as the name suggests, and stand as the second largest commercial port operator in India in terms of the cargo handling capacity in FY22. But let's give a quick check to the markets right now, completely down and out. Losses to an extent of 0.1%. And if you talk about the levels, 19,650. That's the word coming in. A bit of profit booking has perhaps crept into Nifty 50 right now, if you look at the way NSE site has been indicating. But with this, it's a wrap. and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Money Control app.